Hi everyone, let's have a look at my bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the bullish scenario where we are looking for a three-wave structure in a WXY with inside wave Y, a three-wave in an ABC, which is a 5, 3, and then a 5-wave move to the downside, where a rare target for wave C is the 1.618, pulled from the high of X to the low of A to the high of wave B. And as you can see, price is now testing the 1.618 over here, and we are ranging. It is going to be weekend, so we might be ranging throughout the weekend, and maybe on Monday or Tuesday grab the lows of the range before then potentially a move to the upside, which then would signal the end of this wave Y. Now we are also just above a little bit of a support resistance area at 26k, which are the candles over here. There was a bit of resistance on the move up, and that can now act as support for price to then move to the upside. And the main reason why my preferred scenarios at the moment are more towards the bullish side with eventually a move to the upside has to do with the volume. So if this is a very bearish scenario, like a 1, 2, and then a bigger 3, 4, 5 to the downside, I want to see volume increasing massively while price is moving to the downside. But at the moment, that is not the case. Of course, we had a bit of a spike over here because of the news that happened around these times. But if you disregard this spike, the volume has been very, very average and has been equal to wave A, which is a sign for a potential wave C. Because if this is a wave 3, you want to see the volume increase with price going down. But in an ABC scenario like this, an ABC, this wave C usually has about the same amount of volume as a wave A. And if I pull a horizontal line between the volume of wave A to the volume of wave C, you can see that pretty much the volume of this wave C, which is then reflected over here, is about the same as the volume of wave A. So very, very interesting, which is therefore the reason I am looking for eventually a bit of a bounce in this area. Now, of course, if price is moving further to the downside, I have a scenario for you coming up, but my more preferred scenario is actually looking for a bounce eventually, where of course it's not just Elliott waves and just YOLO enter a trade because we expect upside and then stop loss somewhere below. Now, in my opinion, a proper trader is at least waiting for a couple of his or her entry requirements, which means you look for certain things on the chart, maybe a change of market structure, maybe a move to the upside, a retracement and bullish divergences, or at least anything to support your bias for a potential move to the upside. Because on this channel, we are not gambling, we're not FOMO, we're not YOLOing with our money. We are responsible and disciplined traders with a plan and a structure. If we then go to another bearish scenario, or this is at least a bearish scenario, the other one was of course more bullish. This bearish scenario over here is then an A 5-wave structure and then an ABC before then a bigger C to the downside. So we then have an A over here, which is a 5-wave move, followed by a 3-wave move and then a wave B, before then continuation to the downside in a wave C. That means that inside this wave B, we have an expanding flat, in this being a 3-wave structure, followed by a 3-wave structure. So again, an ABC as a 3-wave structure in this blue B, for then eventually continuation to the upside in an impulsive wave, which is then a wave C. The most common target area for the blue B over here is between the 1.236 and the 1.38, which is between 26.5k and 26.1k. Again, the support resistance area just below at 26k as well. And in this particular scenario, if this is an ABC to the upside, then you expect price to eventually from this area over here move to the upside as well. Of course, then a potential trade in this particular scenario, which is an alternative scenario, so please keep that in mind, would be to park the stop loss somewhere below the 1.618, and then we're looking for a move to the upside. But then again, don't forget what I just said, we're looking for some signs of a reversal. That's very, very important. And also this scenario starts to become more and more of an alternative because of the time it takes to develop then this potential wave B. So over here, you see a couple of vertical lines, which are Fib time lines. And Elliott waves are also related in time, not only in price with price targets, but also time targets. And the Fib times that you see over here are pulled with this tool over here, the trend-based Fib time, which you can find pulled from the high of A to the low of A, and then you double click over here. And what you then do is you compare the time it took to develop wave A to the time it takes to develop this wave B. And as you can see at the moment, wave B as it stands now, this being then the green B, right, is already past the 1.618 Fib time of wave A, which basically means is this structure over here is already 161 percentage longer than this wave A basically. So starts like this wave B starts to take very, very long, and because of the time, it is not a preferred scenario, it is an alternative scenario. And also, if this is then the low of wave B and we're looking for a C up, it has to go up very, very quickly. Like, of course, a wave B, yes, it can take towards like the 2.382 fib time, absolutely possible, but the longer it takes, the less likely this scenario becomes. So therefore, it also starts to become more and more of an alternative scenario. If we then look at another bullish scenario, we're looking at this being a 5-3-5 wave move. This is also an alternative scenario, and that has to do with this wave B. So the reason that this is an alternative and then a 5 wave move, a 3 wave move, and then another 5 wave move to the downside, where the most common target for a wave C is between the 1 and the 1.236, which is between 26K and basically 25K, this area over here. The reason this is a alternative for me has to do with this structure of a wave B, where this very much looks like a WXYXZ pattern, which can only exist in a wave X, in a wave B, or in a wave 4 or 2 potentially. And then you might think, hey, but this is part of a wave B, right? Where I actually think, okay, the chart just refreshed, but you might think, okay, WXYXZ, he just says, hey, in a wave B, it is possible. Well, yes, this is a wave B, but what I mean is this has to be the middle of something, in this then being an ABC, for example, or a WXY. This being a WXYXZ cannot end a structure, which is then in this case, for example, a wave B. And currently the preferred scenario is that this is a WXYXZ, which cannot end a structure, in this then being a 3-wave move. So therefore this at the moment is not preferred. However, one cannot disregard that this might be still somehow a 3-wave structure, which is very difficult to count, honestly, very much looks like a WXYXZ. But then eventually the target for wave C would be this area over here, right? The main target. As mentioned. Now the very bearish scenario is continuing to the downside, which then starts to become more of an impulsive structure. Even though the volume at the moment, as mentioned over here as well, I wrote volume, even though the volume is not necessarily supporting this to be a 1, 2, and then another 1, 2 for then a bigger 3 to the downside. Because if this is a wave 3 for the white count, of a wave 3 being the blue count, you really want to see volume pick up. You want to see this volume to be higher than the volume of this wave 1. But look at the volume of this wave 1 over here compared to the small volume that we have in potentially a wave 3 of a wave 3. It's ridiculous, right? That's not what you want to see. You want to see the volume pick up massively when this move is going to the downside. Of course, the move might not be finished and we can continue to the downside. I have an interesting support area over here as well, which I keep my eye on in case price is moving to the downside. I'm looking for a bit of support between 24,850 and 24.3K. So you can make sure to write those down as well. Some interesting confluences in this area in case price wants to move to the downside, because we of course don't know what price wants to do. But this scenario at the moment is not necessarily preferred because of the volume. And another reason is the 1-2-1-2 diagonal potential. It basically means that if we are in a 1-2 and then another 1-2, what I like to see in a 1-2-1-2 is a diagonal structure, being a 1-2, then another 1-2, and then continuation down, where the second wave 1 is taking the low of the first wave 1. However, as you can see, the second wave 1 over here did not take the low of the first wave 1, which is not something I like to see in a 1-2-1-2 setup, which therefore again brings me to my more preferred scenario of eventually finding a bounce for more upside instead of having a very bullish scenario for a lot more downside. Now, of course, I can be wrong, but based on the analysis and based on Elliott Wave knowledge with the theory that we have and the volume and the waves that are being generated, it doesn't look incredibly bearish for a lot more downside to much lower prices, right? The final thing I do want to show you, which is not necessarily Elliott Waves, but a bit of range trading, which might be something you want to add to your skills as well, is that we have a volume profile range over here from the whole range that we've been in, from basically the 4-hour candle on the 17th of March at 1 p.m. Central East European time, which kind of was the beginning of this whole range, to where we are at the moment. Now, as you can see, price is below this volume area. You have the value area low, the point of control, and the value area high. And basically what this shows is that 70% of the volume traded in this area, or 70% of the volume traded in this whole area was in between the value area low and the value area high. Now, what one could be looking for more of a bullish sign, for example, is that if price is going to move to the upside, and you then have the value area low over here. If price is moving to the upside, passes the value area low, backtests the value area low, and continues to the upside, breaking this high once again, that could definitely be a signal for continuation to the upside, where the value area high is the next main target. If not, following the more bullish scenarios, a continuation to the upside. So this could be, for example, something to look for, to have a bit more of trust instead of just gambling, a bit more of trust based on TA on what you want to see. But I also already mentioned some other things you can look for on lower time frames, like CVD divergences, local structure changes, and whatever you use in your strategy, right? Because you have your own personal developed trading strategy. So that being said, I hope this video was helpful or valuable to you. Please check out the macro and the high time frame video if you're interested. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.